Welcome to the Credit Union Business News Podcast, the only all-digital, all-business resource for credit unions. This episode is sponsored by Bator Training and Consulting. We create environments where employees actually want to come to work and members want to keep coming back. Hi, I'm Kbator, your host for the Credit Union Business News Podcast, and I have a wonderful guest today. His name is Jason Peach, and he is the CEO of West Community Credit Union. He's been the CEO since early 2016, but has been there as an executive since 2005. He has a long history with credit unions. Looking at my notes here, he's been working with or for credit unions since 1996, starting with the Missouri Student Federal Credit Union, which is awesome. We're going to get a lot of great information, especially on Fintech from Jason. Jason, welcome to the show.
Thank you. Great to be here.
Great to have you. As I mentioned before we press that infamous record button, I'm really excited to have you on because we haven't really covered that fintech angle yet on this show, and I think it's an important part of brand culture strategy in general, especially for credit unions today. But before we even get into that, I'm a big fan of St. Louis. I grew up in Chicago. I did a lot of business in the Midwest. I always used to love going to St. Louis. In fact, it was my number one business destination for a long time. And I know that, there's been a bit of an economic turndown, even before the pandemic and the riots, unfortunately. Yeah, how is your region faring today, and how does that affect the ongoing strategic direction for West Community Credit Union?
Well, actually, it's St. Louis and like the state of Missouri just doesn't have population growth, so I think that's been one of the bigger drivers when you compare various regions. But what's really exciting is actually St. Louis is I think it was Forbes or one of the magazines said it was like outside of San Francisco, the next big kind of technology hub. There's a lot of growth in the technology, including fintech investment space. There's a lot of dollars going into startups, not all of them operating out of St. Louis, but the investment accelerators are operating out of St. Louis. And we have a whole technology kind of midtown area now that is really booming. So in this space, there's a lot going on. And so I think obviously it's great for West Community since I don't have to hop on a plane and go meet folks. Although we're doing a lot of video these days anyway, so I guess it doesn't. It's different, but it's good for St. Louis.
Yeah, no, that is awesome to hear. I haven't been to St. Louis in a number of years. When I was a frequent visitor, I know that there's a lot of great universities and great small business and entrepreneurship over there. So it's really heartfelt to hear that that's happening in your region. And I'm glad at this time that you don't have to hop on a plane and go to San Jose or Santa Monica, where we've got some entrepreneurial hubs here in California.
Yep.
So, I understand, piggybacking on that your credit union invests in a fintech accelerator in St. Louis, and that allows you to both mentor and learn from a lot of those startups. How does that align with the strategy and growth of your organization?
Well, if you don't mind, I'll take you back a few years to our annual strategic planning. And of course, and when you do that, you want to look to the outside world, what's going on around us, and then we need to react to that or respond to it. And, I would say around 2013, 2014, that would be a common thing that was coming into credit union boardrooms and for strategic planning. But at that time, it was about the fintech assault, the risk of fintech. They're going to come in and take us out. They're leaner, they've got capital, they're going to come disrupt us. And it was a threat on our SWOT analysis. But then it started to really shift. And then by about 3 or 4 years ago, maybe 2017, really the language turned to what can we do to benefit each other? How can we find win-wins? We have the trust of our membership, but maybe deal with legacy technology systems that are slower moving. how can we partner with fintechs to achieve our outcomes we need, and everybody can have a good result. So, rather than most fintechs aren't really out there to take us out, they found the B2B partnerships are going to be, for many of them, the way to go. And so, based on that, we've been talking about fintechs in our strategic planning, and obviously digital engagement with our members, and in the importance and growth of those technology channels. We want to bring a great member experience. We want to grow the business efficiently. Technology is a key piece of that, and consumers want it. They're used to it. It's time to make sure we meet them where they want to be. So fintechs are a better way for us to afford change and implement change, because we are not a technology company inherently. We're a lending institution, but we need to bring that technology there. So long story short, we really were being pushed strategically to understand the fintech world and to start finding fintechs that would help complement the outcomes we wanted to achieve. And in St. Louis, came across 630 LLC, which is an accelerator that sources portfolio companies twice a year from across the globe, and runs them through a program that allows the investors like West Community and me personally to work directly with one of the portfolio companies, but also get exposed to the others. And it's been a fantastic experience.
Yeah, I'm really pleased to hear that on so many levels. It aligns with a couple of points that I've been trying to drive home to credit unions for at least the last 3 to 5 years, in that don't strategize from a space of fear. Which
Mhm.
unfortunately I've seen in strategic planning a number of credit unions do. They want to worry about Amazon, or worry about the large banks. And the point that I try to, as eloquently as I can, get across is, don't let what you can't do keep you from doing what you can do. Coupled with and I mentioned that I think that you can learn more sometimes from an entrepreneurial business outside of banking than you can learn from Navy Federal or Chase many times. And the other thing that I point out is that you're not giving up that touch necessarily. Yeah, I think what members really want, and I've heard a number of other speakers talk about this, is yes, they want convenience, they want fintech, they want to be able to interact on their phones, tablets, and so forth, but they still want to know that there's a human touch, that there's a human being behind it, that when they're filling out that loan application, that there's a human being on the other side that's going to treat them with respect, that's going to look at their overall situation and not just necessarily look at them like a form that's been filled out. And I think most credit unions that do fintech really well have kind of embraced, in my words, that branding through technology. Would you agree with that? And is that kind of the culture at West Community?
Absolutely. So, I mean, obviously, when you think about your brand, what do you want to look like and appear to be? And if we're going to talk to our members about serving their needs, I mean, we can't do it all through people or all through technology. So we do bring that together. One of the first fintechs we worked with, which actually, this first one actually, I came through a different networking opportunity locally than 630. But I mean, the whole focus is that member experience, and to, again, meet members where they want to be. But also we are, and I'm sure we will talk in more detail about this, but really focusing on also helping our employees do their best work. And to do your best work, technology can help position you to do that. And so that's where it's a real complementary relationship. And that is really impactful on our culture, because we want this to be a great place to work and be a rewarding work experience. And technology actually can enhance that. It doesn't replace, people. That's a common fear people worry about. It actually helps them do work that's more rewarding. And that's what, some of our fintech is focused on that.
Yeah, yeah, that's a great point. Is do work that's rewarding, that is more member focused rather than just paper focused. I think that's a great way of putting it, and the way you leverage the technology for a more positive brand and culture. Now, a word from our sponsor, Bator Training and Consulting. Would you like to create an experience both for your employees and your members that increases productivity and sets your credit union on a straight path for growth, even in these times? Then let's talk. Let's set up a 15-minute consultation where we talk about your unique institution and how we can increase productivity and growth, whether your credit union is 1 million in assets, 10 billion in assets, or anywhere in between. And during that complimentary session, let's also talk about our B plus C plus S snapshot, formerly called our B plus C plus S audit. We do a deep dive into your brand, culture, and strategy. It's often the perfect start in working with Bator Training and Consulting, and provides a real value in a full report providing observations and implementable actions for the enhancements of your brand, culture, and strategy. This service also includes a 2-hour video meeting with me, Ken Bator, to review the report with you and your management team and discuss how we can create a well-branded experience for your employees and members that's going to increase productivity and help the growth of your institution. To learn more, send an email directly to me at Kbator, Bator, at btcinc.net. Again, that's Kbator at btcinc.net. You mentioned that you work with a local fintech called Capacity, and that powers your AI chatbot on your website. Tell us more about that.
Sure. So that's the one I was referencing, one of our first kind of ventures working with the fintech. And it was such a great experience. We said, gosh, it's not like working with traditional technology players, with have layers and layers of management and overhead. And although we do rely on them as well, but it was a great experience implementing you talked about working with entrepreneurs and entrepreneurial type companies. I got to tell you, I haven't interacted with a lot like that. So it's been a breath of fresh air and incredible to see a different kind of organizational model and pressure and things just move at a different pace. And so it's been pretty exciting. But basically, in our strategic planning, what we understood with digital engagement is that more and more traffic was coming to us, whether it was prospect traffic or existing members to our website. It basically was a branch to many, many folks. And so either the first introduction or where they interacted for some level of service or knowledge. We would never build a brick and mortar branch and throw up a brochure rack and not staff it with people. What's a website? It's a brochure rack and says, go find it. We'll try to have it organized for you. And maybe there's a crude search engine at the bottom that will pull up a list of keywords, but it doesn't learn, it doesn't get better, it doesn't give us information. And so we said, why would we take our busiest branch, which is the website, and give that kind of experience to prospects or potential new members or existing members? We need to meet them where they want to be. But of course, we can't throw human bodies at every problem. So we need a solution there. And Capacity basically brings an AI technology and a chatbot interface that was easy to throw up on the website and start to learn immediately. And it's gone from learning, it could typically answer about 50% of what people wanted to see when we first launched it, and now we're up to about 83%. And now we're actually implementing a live chat feature, so if they still can't get what they need and they don't want to pick up the phone, it'll then introduce them into a live chat session. So we've seen a lot of engagement by members and non-members, and have learned a lot about what they're doing on our website and even the words they use. We've been in the business too long. We use words like endorse a check. Consumers say sign the back or write it. They don't say endorsement. So if they're trying to look for how do I endorse or how do I sign a deposit a mobile check, we had words like endorsement policy or things like that. So in a keyword search, it would never line up. We learned to change our language so that they could find what they need.
Yeah, it's such a great story and example of not only one, what we were talking about earlier in terms of creating a human experience through technology. I don't think that I've heard much better of a story than what you had just mentioned on what you're doing with your website and the keywords. And if we were there in person and we weren't in some kind of pandemic coronavirus insanity, I would have given you a hug or at least a high five when you talked about your website as your busiest branch. I think that some credit unions and financial institutions in general, because I've seen this with community banks, I've even seen this with some financial advisors, think of the website as a marketing piece rather than what it factually is what is your most important branch, because people are going
That's
to
right.
many times go there first, possibly even instead of going to brick and mortar, so you have to treat it that way.
Well, and think about the workforce impact relating to that. Is if people couldn't find what they wanted on our website and they had to pick up the phone, now typically a basic question was now having to flow into our call center and crowding out more, maybe making people wait longer and reducing not only the member experience or frustrating our call center staff because they couldn't get to all the calls they needed to. So I think it allows the right calls to go to the right channels
Hmm.
and everybody has a good experience.
Yeah, yeah. If they're bugging your call center professionals because they can't find the darn hours or the ATM
The routing
locations on
number,
the website, yeah, if they can't find that basic information, it's keeping your call center professionals talking to somebody with a 492 credit score that really needs credit counseling and some help.
right? Right. It's a win-win, and then we can take this information into our strategic planning. The next step we're going to do that we're actually working through right now is actually turning this in reverse and actually bringing the tool into our to connect with our knowledge base and our intranet and letting our staff interface with it so we can, rather than hey, I need to understand a policy and a 10-page policy or a 30-page policy comes up because they want to know one thing about something in that policy. Now this tool will go into the document and give them just what they need. So again, the workforce experience is going to be vastly improved, and we'll better know what our workforce wants to do. We started on the website because that was the easiest way to go 3 years ago, and and obviously the member is our priority. But really, to serve our member best, our workforce needs access to the technology too. So that's not done yet, but that's our next. Actually, that's what capacity was. That organization was built actually as an HR focused knowledge management tool. And we actually were the first to kind of turn around and say, well, let's use it on our website. And they said, wow, that makes sense. And now I know they've done that in a number of other cases as well.
Yeah, yeah, great examples, great story. Um, Slightly off the cuff because I want to get your perspective. If I remember it correctly, your credit union is about 300 million in assets. I guess depending on who you talk to, you're a medium-sized credit union or a small credit union or an up-and-coming credit union. Who knows? I try not to necessarily label credit unions by their assets alone. But yeah, I personally have seen extremes and everywhere in between of credit unions whose idea of advanced technology is putting a Staples calculator next to their yellow legal pad, to ones
Right.
that have really embraced it, where they almost don't even want you to talk to a human being. It's all electronic and so forth, and everywhere in between. One, it seems like you found that nice balance. But what are you seeing in the credit union industry in terms of fintech? Are you seeing in general that credit unions are really getting it and starting to find ways like you are to embrace it? Or are they just kind of being left behind, and that's accelerating this decrease in the number of credit unions and access we have in the country?
No, well, I have some competing thoughts. So,
Sure.
nothing's all perfect or all bad. But
Sure.
I'll start on the positive side. The one thing that helps our industry and has always helped our industry is that because we're so small, I don't care if you're $1 billion or not, in the grand scheme of things, we're small. I mean, JP Morgan Chase spends in 2 hours on technology what we spend an entire year in technology. And so, and that's 11 or 12 billion to, 3 million. So, I mean, it's just night and day. So the way we are successful is we collaborate, we form QSOs, we have channel partnerships that get, pricing with providers of services and then get them delivered to us in a way that we can afford and implement, because we don't have huge IT departments or huge operational departments. So when it comes to fintech, what I'm seeing more and more, and I collaborate with a number of our channel partners, when I see a technology, I reach out to them and say, you guys got to go look at this, and maybe this is an opportunity. But basically, whether it's through CUNA Mutual or, Allied, I'm going to leave somebody off and somebody's going to get mad that I didn't say their name, but,
Right.
basically, those are the ones that I primarily work with. CUNA has to create strategic partnerships. And I think through the channel partners, our core systems are actually sometimes gobbling up the fintechs and embedding them into their system. So sometimes, we use a product, we call it Credit Sense, but it was Savvy Money. And they were an idea that I think came through the Filene Institute in some way, but then Fiserv and other core processors buy their technology and rebrand them into their system. And basically our members can go into their mobile banking and actually access their credit bureau real time and actually see offers and how they can save money, and embedded inside our mobile app. That technology was through a fintech that partnered with, a core provider like Fiserv to get reach, to a number of credit unions. So credit unions may be using fintech technology and not even realize it. And I think so I don't think credit unions are getting left behind at all on fintech. What I think is that we have to build more muscle with trying innovations and trying things and starting and stopping, and it's time consuming. And I think we have to go beyond just generic loan production fintech, but like capacity, how do we use fintech or technology to become more efficient or to do, smarter work, not harder work. And so I think making sure our technology focus isn't just product oriented, and it actually looks at how we run our business, could be areas of improvement. And, again, being involved in 630, we get a lens, we get a viewpoint also of what are the major insurance companies looking at? What are the major investment firms looking at? It's not just banking. So it allows us to look at, other non-traditional competitors and know where they're going to make their play, and how do we think about that strategically for us. So long story short, I think fintech is in the credit union world. Some are more active in exploring it in different ways, like we might be, but I think, it's being delivered and made available to credit unions of all sizes through our channel partners.
Yeah. No, great perspective on that, and I definitely agree with you. Switching back to West Community Credit Union and your continually evolving strategy, if you will, how is your work in the fintech space enhance your credit union's brand and culture?
Well, first of all, I don't know how many people have told me this, but they always, when they hear about us or see us or interact, and they understand size and scale for banking, they always say we look, they think we're larger than we are, and that's a nice compliment. I think what that means is that we are providing the full breadth of what most consumers would expect, with a lot less resources to do that, and so I think that's a big compliment. So I think that's really the biggest feedback that we get, is that it allows us to be a choice for all age generations. So, I mean, I think for consumers, and I don't want to just paint young consumers as tech savvy, because I think that's something from 2010. That's today. I think you can have tech savvy across, most age groups, and But I think for the population who enjoy tech, who enjoy the digital interface, it's allowing us again to meet them where they want to be. And that's a huge brand thing. You know, if they don't
Yeah.
think that we can deliver that, they're going to go pursue other technologies. And it doesn't mean other banks. It could be, other
Yeah.
fintechs that are standing more on their own.
PayPal, Amazon, yeah, and you could
You name it.
sell.
So I think this is definitely, uh, when we go out there and speak about ourselves, when we market ourselves, we can stand behind that and deliver on that expectation. I mean, that's really important too, because we can build a brand image. We can paint a picture, but the reality could crumble pretty quickly if we can't stand behind it. And that's what our involvement with fintech and technology is. It gives me, I can sleep at night. I can't sleep at night about all the pandemic stuff, but I can sleep
Right.
at night about technology, fintech, that we're doing the right things to stand behind a brand that again meets consumers who are expecting more technology and convenience. They want information now. They want it their way. I mean, that's what we need to provide, and fintech's going to be a part of us figuring that out.
Yeah. Well, since you got the fintech thing somewhat figured out, if not completely, when this pandemic thing is over, maybe you can get a good night's sleep.
Yeah, I think so. I think so. Well, maybe sleep's overrated. We'll find out. So
Yeah, yeah. As I get older, I find that out myself, especially at 2 or 3 in the morning when I'm staring at the ceiling. To kind of close this out, is somebody as an executive in a credit union that's embraced fintech. Any predictions or thoughts on what fintech may look in the future in the credit union industry? Maybe 5 or even 10 years down the line.
yeah, I think that you're continuing to move away from is full reliance on a one single core provider.
Mhm.
So kind of a ambivalence to you could be with Scimitar or Fiserv. How can you be almost agnostic almost to who the core is,
Yeah.
and allowing fintechs to interchangeably through APIs is a big game changer. Just plug and play. I'll say on the flip side, there's going to be several challenges that we'll have to figure out, and we're in the middle of trying to figure these out. It's not all, I paint a nice picture, but there's a lot, kind of like a duck. It's nice and calm on the water, but underneath
Yeah.
it's paddling like heck. So, I know Mark Seabright. I'm sure you've met him, and he's a big industry guy, and he talks about the mullet banking. It's pretty in the front, but wild in the back. And
Yeah.
so I think so we are definitely trying to avoid that kind of to use his term, mullet banking, because as we keep adding on these fintechs, we have to make sure our operations and our processes don't get siloed or tangled up, or we actually create inefficiencies because we aren't synthesizing or integrating what we're doing. And so I think that's going to be the challenge, is when to say no, making sure you're not creating a mess that actually detracts the value of what you're doing. That's going to, this is a new world. When I started in credit unions, we didn't have to manage that. So there's a lot of us in positions today that can't go back and use past experience to be good at it, right? Or be considered knowledgeable, right? So we have to keep learning and evaluating, what went well when we put a fintech in place. We've probably got 5 or 6 fintech implementations outside of our core. And I would tell you, not everyone has been perfectly successful. Not everyone delivered on what we thought it would do. It got us excited. The data sounded good. The results that we felt like, man, consumers are going to just dig this.
Yeah.
And consumers don't always act the way we think they're going to act. That's what the frustration of every economist out there, right? So consumers or people aren't rational or don't always do that. So I think our challenge is trying to control our costs and being thoughtful about what we implement, and being able to walk away or change rapidly if things aren't working out. So that's what the next 5 to 8 years is going to be, probably the headache of many of an executive in the credit union world.
Yeah. Yeah, great points. Agree with all that. Yeah, especially given the fact that it seems like we've been in uncharted territory, maybe even for the last decade or so. And 2020 is definitely proven that. If there's
Yes.
anything that I think strategically that I could be confident in saying that that will continue, in that there won't necessarily be a lot of precedent that we could fall back on. Loved everything that you said. Yeah, the only thing that I will take you to task on is
Okay.
being an 80s child. A mullet is business in the front and party in the back.
Thank
So
you.
you got
Thank
that
you.
wrong, but everything else I think you got right. How's that, Jason?
That's what I get for trying to use somebody else's quote too, right? So,
Yeah, go back, watch the first Lethal Weapon, look at Mel Gibson, you'll know what I'm talking about. Uh,
I
but other
appreciate that.
but other than that, really enjoyed our conversation, Jason. I learned a lot in
Absolutely.
the last half hour, 45 minutes that we've been together. Really excited for what you're doing at your credit union. And most importantly, I really appreciate you taking some time with us today.
Thanks, Ken. It was a pleasure. I appreciate it.
Pleasure was all mine. Thank you again. And thank all of you for either watching or listening to this episode of the Credit Union Business News Podcast. And we will be coming back at you in another 2 weeks with another great episode. Take care. Learn more about Credit Union Business News at creditunionbusiness.com. Suggestions for the Credit Union Business News Podcast can be directed to Tim O'Hara at tim@cubusiness.com or Ken Bator at Kbator, Bator, at btcinc.net. To learn more about this episode's sponsor, please go to btcinc.net.